You're losing money right now, not because of bad trades, but because you're reacting to news after it happens, rather than positioning yourself before it moves the market. We've dissected billions in market-moving events, showing how institutions react in seconds, while retail traders lag behind. Let me explain. Picture yourself always a step behind the market, losing money because you're reacting to news instead of anticipating it. This approach is like trying to win a race by following the leader's dust cloud. In this video, we reveal how institutional traders stay ahead of market shifts. You'll discover techniques for interpreting market data and news and using real-time data tools. We'll show you how to position yourself for profit before news breaks, transforming your trading strategy from reactive to proactive. Learn to think like the professionals and gain the edge you need in today's fast-paced markets. Stop reacting, start anticipating, and transform your trading results. And here's the thing, by the end of this video, I'm going to show you exactly how professional traders get access to real-time, institutional-level news before the markets react. This is the same tool that lets them profit before retail traders even know what's happening. So stick around, because this is something you won't want to miss. In the high-stakes world of financial markets, institutional traders consistently outperform retail investors during critical events. This edge stems from their sophisticated approach to decoding and acting on market-moving news with precision and speed. Institutional traders employ a proactive, systematic approach that allows them to anticipate and position themselves ahead of major market shifts. This approach is built on comprehensive analysis across key categories of market-moving news. Market data and news form the foundation of institutional analysis. These traders construct intricate models to forecast GDP figures, employment data, and other key metrics based on a myriad of leading and coincident indicators. By the time official figures are announced, institutional traders have already positioned their portfolios to capitalize on the market's reaction. Geopolitical events present another crucial arena where institutional traders excel. Teams of analysts monitor global political developments, assessing potential impacts on trade relationships, commodity prices, and currency valuations. This deep understanding allows for the construction of probabilistic scenarios and hedging against various outcomes well in advance of retail awareness as a corporate earnings serve as the third pillar of institutional news analysis. While retail traders might fixate on headline numbers, institutional players conduct thorough supply chain analyses, channel checks, and scrutiny of management guidance. This holistic approach enables them to identify discrepancies between market expectations and likely outcomes, positioning for inevitable price adjustments. The sophistication of institutional news analysis extends to sentiment analysis and proprietary algorithms. In simple terms, custom-made programs or systems. Advanced natural language processing using AI gauges market sentiment across millions of data points in real time, detecting subtle shifts in market psychology. Sophisticated systems ingest vast amounts of structured and unstructured data, identifying patterns and relationships impossible for human analysts to discern manually. These tools and techniques allow institutions to react to market-moving events with superhuman speed and precision. They leverage high-frequency data feeds, AI-powered predictive models, and direct access to institutional-grade research. These resources enable them to construct a real-time, multi-dimensional view of the market that informs their trading decisions. To compete in this landscape, serious traders must adopt similar methodologies. When significant economic data is released or geopolitical events unfold, savvy traders should immediately assess potential impacts across various financial instruments. They must develop the ability to rapidly combine multiple data streams, forming a cohesive market view. Ultimately, the institutional edge in processing market-moving news comes down to speed, depth of analysis, and the ability to act decisively. By emulating these approaches and leveraging advanced tools, traders can position themselves to capitalize on market movements rather than reacting to them. In financial markets, a single headline can move billions in seconds. Institutional traders act instantly, while retail traders lag behind. Now, imagine if you had access to the exact headlines that move billions before they hit mainstream media. How different would your trading results be? We'll break down real case studies in a second, but don't forget, I'll reveal how you can tap into the same institutional-grade tool by the end of this video. One of the best examples of how institutional traders react instantly to news was during Trump's presidency. When he unexpectedly announced a 25% tariff on Mexico and Canada, NAS 100 crashed in seconds. Now, look at this. Here's the actual Reuters headline from January 21st, 2025, exactly 3:49 a.m. Right next to it, you can see the exact moment NAS 100 dropped at the same time. Institutional traders, using real-time news feeds like Reuters and Bloomberg, executed short positions before mainstream media even picked it up, securing capturing early profits. Meanwhile, retail traders, waiting for CNN or Fox News, entered far too late, missing the most profitable move. By the time mainstream media caught up, the market had already reacted. This is why real-time news access is critical. If you're late, you're the liquidity. In the intricate dance of global markets, certain market data and news stand out as the tempo setters. These metrics cause institutional trading floors to burst into action, often before the broader market has even registered their significance. Professional traders understand that not all indicators are created equal, focusing on leading indicators that offer predictive power. The Purchasing Managers Index, PMI, serves as a prime example of a leading indicator that professionals closely monitor. Traders pay particular attention to the service's PMI, which accounts for approximately 80% of a developed economy's GDP. When interpreting PMI data, professional traders don't simply look at the headline number. They compare actual results against market expectations, understanding that surprises can lead to immediate and significant market reactions. Bond yield curves represent another critical indicator on the professional trader's radar. The relationship between short-term and long-term government bond yields can provide valuable insights into future economic conditions. An inverted yield curve, where short-term yields exceed long-term yields, has historically been a reliable predictor of economic recessions. Volatility indices, such as the VIX, offer yet another dimension of market intelligence. Often referred to as the fear gauge, these indices measure expected market volatility. A sudden spike in the VIX might indicate growing uncertainty, prompting traders to adjust their risk exposure or seek out safe haven assets. Professional traders recognize that these indicators don't exist in isolation. They combine multiple data points to construct a holistic view of market conditions. For instance, a strong PMI reading might typically be bullish for a country's currency. However, if this coincides with rising inflation expectations and an inverted yield curve, it could instead signal an overheating economy, potentially leading to tighter monetary policy and market turbulence. The importance of liquidity flows, money movement, in this analysis cannot be overstated. Institutional traders leverage their access to real-time data to capitalize on shifts in market sentiment before retail traders can react. They monitor the movement of large capital flows between asset classes, understanding that these shifts can precipitate significant market moves. Central bank communications play a pivotal role in shaping market dynamics. Traders scrutinize every word from central bank leaders, looking for clues about future interest rate decisions or changes in economic outlook. For example, if the Federal Reserve signals a pause in interest rate cuts, it can lead to a strengthening of the US dollar and a corresponding drop in gold prices. The Non-Farm Payroll (NFP) report serves as a quintessential example of how professionals use market data and news to anticipate market moves. This monthly release of US employment data is known for its potential to cause significant market volatility. Traders understand that job growth typically leads to a rise in equities and a strengthening of the US dollar. However, they also recognize that the context matters. Professional traders don't just react to these indicators in isolation. They understand the broader economic implications and how different data points interact. This nuanced interpretation allows traders to position themselves for longer-term trends rather than just short-term fluctuations. A shocking NFP report, just 12,000 jobs added, stunned the market. USD, JPY melted, gold soared. Institutions acted instantly. Here's proof. The official non-farm payrolls data dropped on November 1st, 2024 at 3:30 p.m. and 2 seconds. And at that exact second, USD JPY started its freefall, not a second later. The Trade Avenue's Reuters terminal provided this data instantly, allowing traders to react before the market made its full move. But retail traders, relying on free sources like Forex Factory, got the data almost a minute late. By then, the market had already moved. In a fast-moving market, a 60-second delay is the difference between a winning trade and chasing a bad entry. This is why professionals use institutional-grade data feeds instead of public sources. In financial markets, the interpretation of information often separates successful traders from those who struggle. While institutional traders navigate economic data with precision, retail traders frequently make costly mistakes due to misinterpretation and emotional reactions. A primary challenge for retail traders is acting on headlines without context. When major economic reports are released, many amateur traders execute trades based on surface-level information, leading to suboptimal entries and quick reversals. This reactive approach fails to consider the broader economic landscape and often results in losses. Emotional decision-making during volatile news cycles presents another significant danger. Retail traders often allow fear and greed to dictate their actions. triggering panic selling during sudden market drops or impulsive buying during rapid rises. These emotional responses frequently result in poorly timed trades and significant losses. Misinterpretation of economic data releases is a common error among retail traders. Without a deep understanding of how various market data and news interact, many traders make simplistic assumptions. For example, they might view a decrease in unemployment as universally positive, failing to consider its relationship with wage growth, inflation, or productivity. This narrow view can lead to misguided trading decisions that don't align with the actual economic implications of the data. Institutional traders have a clear advantage in their ability to process news quickly and accurately, allowing them to react effectively to market-moving events. They utilize comprehensive analysis tools and maintain disciplined strategies that account for various economic scenarios. This approach enables them to position themselves ahead of market moves rather than reacting late. To bridge the gap between amateur and professional trading approaches, retail traders must adopt a more structured approach. Expert advice emphasizes the importance of having a predefined trading plan that includes scenarios for different news outcomes. This preparation can help traders avoid emotional decision-making and stick to their strategies even in the face of unexpected market movements. Implementing robust risk management techniques is crucial for reducing the dangers associated with news-driven trading. Experts recommend using stop-loss orders to limit potential losses and maintaining a balanced portfolio to protect against significant drawdowns during volatile news events. These practices create a buffer against market uncertainties and align with the disciplined approach of institutional traders. To improve performance, retail traders should focus on developing a deeper understanding of market data and news and their interrelationships. Utilizing real-time news feeds and sentiment analysis tools can provide a more comprehensive view of market conditions, enabling more informed decision-making. By adopting these strategies, retail traders can position themselves to make high-probability trades based on thorough analysis rather than reactive emotions. Suddenly, South Korea declares martial law, markets panic, Nikkei 225 crashes, institutions dump risk assets instantly, retail traders still waiting for CNN to report. By the time they react, the move is gone. Check this out. This is the actual Reuters headline from December the 3rd, 2024 at exactly 4:33 p.m. And right next to it, the Nikkei chart at the exact moment it tanked. Institutional traders, tracking global instability, saw the Reuters headline instantly and took action. But retail traders? By the time mainstream media reported the news, Nikkei had already sold off hard. Speed wins in trading. Without fast news access, retail traders are always late, always reactive. With access to the Reuters terminal in the trade avenue, you act first, not last. As the financial landscape evolves, the gap between institutional and retail traders narrows. Tools once exclusive to Wall Street's elite are becoming accessible to individual investors, fundamentally changing trading dynamics. This wider access to institutional-grade technology levels the playing field, while presenting new challenges for retail traders who must learn to harness these powerful resources effectively. Professional trading success hinges on processing and acting on information faster than the market. Real-time news terminals, a staple in institutional trading floors, provide this crucial edge. These sophisticated platforms offer a continuous stream of market-moving information, allowing traders to spot opportunities and risks as they emerge. They aggregate and contextualize data from multiple sources, providing a comprehensive view of market conditions. Fast, low-latency data feeds are another critical component of institutional trading infrastructure. In a world where milliseconds can mean the difference between profit and loss, these high-speed connections ensure traders receive and act on information before it's fully reflected in market prices. For retail traders, gaining access to similar low-latency feeds significantly enhances their ability to execute timely trades, particularly in fast-moving markets or during major news events. Artificial intelligence and machine learning are transforming news analysis and interpretation. These advanced systems process millions of news reports in real time, identifying patterns and sentiment shifts that might escape human observation. As one expert notes, traders using AI-driven news analysis can discover important messages in real time, allowing them to react faster than traditional methods, which rely on delayed news broadcasts. This AI-powered approach to news analysis is particularly powerful when combined with human expertise. While algorithms excel at processing vast amounts of data quickly, successful trading still requires careful analysis and interpretation and strategic decision-making. Expert mentorship becomes invaluable, guiding novices in developing skills to interpret news events, understand market sentiment, and formulate effective trading strategies based on real-time information. The impact of these tools on retail trading can be transformative. With access to institutional-grade technology, individual traders can position themselves ahead of market movements. For instance, a retail trader using advanced news analysis tools might identify a shift in central bank policy before it's widely recognized, allowing them to enter positions in currencies or bonds ahead of significant price movements. However, these tools, while powerful, are not a guarantee of success. As one industry expert cautions, successful news trading requires a high level of expertise and risk management, as traders must interpret news correctly and derive suitable trading positions from it. This underscores the importance of education and practice in leveraging these advanced tools effectively. The future of retail trading looks increasingly sophisticated. As AI trading software and other institutional-grade tools become more accessible, retail traders are gaining the ability to compete more effectively with their institutional counterparts. This trend is likely to continue, with ongoing innovations in financial technology further democratizing access to advanced trading capabilities. So, we've seen how institutions dominate the markets by reacting instantly to breaking news while retail traders get left behind. But here's the best part: you don't have to be left behind anymore. In just a moment, I'll show you exactly how to get your hands on the same real-time news tool that professionals use to stay ahead. Get ready, because this is what separates winning traders from everyone else. The trading landscape's evolution has democratized access to professional-grade tools, allowing retail traders to make informed decisions rivaling institutional investors. This convergence creates opportunities for prepared traders leveraging advanced strategies. As institutional investors continue to influence market dynamics, retail traders must adapt their methodologies. For serious traders, utilizing platforms with real-time data, expert mentorship, and institutional-level tools is crucial. This approach enhances strategies and anticipates market movements effectively. Are you ready to stop reacting and start winning? Now, here's what separates serious traders from those who are always a step behind. Institutional traders don't wait for mainstream media. They use tools that give them instant access to market-moving news before it hits the headlines. And for the first time, you can too. Inside the Trade Avenue, we provide 24/7 streamed access to the highly valuable Reuters terminal directly inside our Discord. This is the same tool that institutions use to react before the market moves. If you're ready to trade like the pros and stop playing catch-up, click the first link in the description. But listen, we're only accepting a few serious individuals who are ready to invest in their trading future. Once spots fill up, that's it. Don't wait until you're left reacting again. Take action now, and we'll see you on the inside.